Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide financial support, additional financial support to our organization above and beyond their membership, in large part so that we can continue to be a strong voice for the real estate finance industry before the California State Legislature and our regulators. So please please help me thank our 2024 President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. I greatly appreciate it. And with that, I'd like to welcome today's guest. I am happy to be welcoming Skye Laudari, who is CEO of Crib Equity. Skye, welcome.
Thank you so much, Susan. It's a pleasure to be here.
It was nice to meet you just a few short weeks ago at the MBA Chairman's, beautiful location, and you and I got a chance to talk, and thank you so much for becoming a member. And I always kind of like to start out the podcast interviews talking about how people got into the mortgage industry. And I know you shared a little bit about with me, but I'd love for you to share with our listeners how you got into the mortgage business.
Yeah, it's a really great question, and honestly, not one I get asked very often. So it's sort of a fun direction to start with. So, generally as an entrepreneur and a technologist, I'm always looking for meaningful problems to solve, and I think generally that a good place to start is with your own, right? And so really, Crib Equity is in large part born out of my own journey and trying to solve for my own path into homeownership. And so, here in California, my wife and I tried for a couple years to buy a home, right? And we were not alone in being priced out of the market. And ultimately, we decided that that home ownership was so important to us and integral to the start of our family that we moved out of state in order to buy our first home. And I think that that's indicative of this new idea. I think sometimes we talk about the new starter home isn't really a starter home. You can qualify for some budget, but whether or not that budget actually allows you to purchase a home where you live is another question altogether. And so we sort of took that, the qualification we had, and we went to another market where it would actually get us a home. We were there for a few years and ultimately decided that we wanted to be back in California if we could make it work. And when we sold our house, we realized that appreciation and growth in our home, actually in the Seattle area, allowed us to move back to California. And so it was really this idea of getting into the market, even though we had really only purchased 75% of a California home in Washington, that we could then gain the appreciation on that home equity, grow that to a point where the net allowed us to come back to California. So in a sense, if Crib Equity had existed at that time, we still could have bought 75% of our house. We just would have done it in California. And so sometimes I say we moved 2,000 miles to move a mile from the rental that we had before we left. And ultimately that would have been a lot less disruptive and probably more enjoyable for our lives. But really that the unlock was getting into home ownership and understanding how powerful that was, both financially and setting us up in the situation to move back to California and acquire a home in the area that we wanted, but also psychologically, personally, it's a very important milestone, I think, and an achievement that people can feel really good about. And so, that's how I got into mortgage, was really about trying to figure out how we can enable more folks to get into homeownership and obtain a mortgage that allows them to do that.
Yeah, that kind of leads me to my next question. I know, like I said, you and I met just a couple months ago, and I'm fascinated by the concept of Crib Equity. So let you tell us about the company.
Yeah, so we, in short, have created a shared equity investment where a third party can support a home buyer in their purchase through a direct contribution of equity into the purchase. And so that third party investor doesn't have a payment for their contribution. They're contributing equity, so that improves the LTV, the DTI of the borrower. It allows them to meet their down payment goals or capital reserve requirements and ultimately improve the terms under which they can borrow or increase the flexibility in terms of the purchase price or how they want to manage their own personal finances. And so, when we looked at Quebec and we thought, okay, how do we create, and we have this aim of creating more access to homeownership and doing it in new ways that enable affordability. We really looked at the data and we went back to first principles and we thought, okay, what are the challenges here? And we realized, it doesn't take long to realize that down payment is a significant challenge or the significant challenge. And sometimes it's direct. It's like, hey, well, you don't have enough down payment or you don't have enough capital reserves. And sometimes it's indirect. And that's because your DTI is too high, right? Home prices and wage growth have separated so dramatically over the last few decades that there are many folks that, just even though they have some down payment, it's not going to be sufficient to get them into a monthly payment that they can afford. And so if we can contribute to their purchase in a way that reduces the debt burden, then now all of a sudden they do qualify. And I know probably all the listeners can sort of do a lot of that math in their head to realize, well, what happens if I take someone from a 10% down payment to a 20% down payment? It's a very substantial, affordability bump. And so, I think in California, we have this benefit of a lot of people are familiar with the Dream for All program. And in many ways, we act like that program, but with a private sources of capital, and without many of the same sort of considerations or restrictions around usage. So without the income limitations, without first-time home buyer limitations, we really think that, housing affordability, while there are certain demographics that it impacts very significantly, it is an issue that impacts almost everyone, particularly in high-cost centers of living, which California has a ton of, right? And so to limit someone's income, but then tell them that, to be eligible for the program, but then say, but you're buying in parts of Los Angeles or San Francisco or San Diego, it's untenable, right? And so, but people still want to become home buyers in those areas. And so, we just don't have those same qualifications. And I think for us also, like just in terms of our program in general and some of the ways we differentiate is, we really looked at this and said, we need to be as good or better than the next best alternative at all these different turns for the home buyer. And so we've aligned our product and the transactions and the outcomes between this, investor third party and the borrower resident homeowner in such a way that I think they really share in the same benefit throughout the purchase. So, this investor is sharing in the closing costs when they buy the home. They're sharing all the selling costs when the home is sold. So they're not taking a top level appreciation and then leaving the borrower and the resident to sort of hold the bag on whatever the net left over is, right? They are incentivized along with them to get the best outcome in terms of the net proceeds that are available at sale or at the disposition of the property somehow. And so that really, I think, puts everyone together in a way that hasn't been done before. So we're really excited about that.
You had mentioned, and of course, it's true, California being one of the biggest states, but in a state like California, a down payment assistance programs are just crucial to help people achieve the American dream of homeownership. But do you think that there's still a lack of understanding of all the programs that are out there that are available to help borrowers?
I think so. I mean, there are, in some ways, like I know that there are more programs emerging to help people understand all the ways in which they can qualify. I think that the challenges that we often see with that, and there are some programs we can work right alongside, right? So if someone is using a DPA program to take some assistance into their home purchase, well, we can match those funds just like we can match their own typically to provide even more leverage for them in the purchase. But some of the challenges that we've seen, not to the detriment of these programs, they're wonderful, but in areas like California, an extra $5,000 or $10,000 to closing costs as a contribution may or may not actually be significant to the overall, economics of the transaction. Obviously, anyone's going to take it if they can get it, particularly if it's a grant or something. But the contribution amount is really meaningful, and in our case, we can always go up to matching the funds that the home buyer brings in, and in some cases slightly more. So if you have a home buyer that's in California looking at a $1.5 million purchase and they're looking to get $300,000 and they have 150, well, we can do 150 $100,000. So that's not a sum of money that any down payment assistance program can also bring to the table.
Right.
And the other challenge we see, right, is that there is a lot of these programs have qualifications around them that help a segment of the market, particularly LMI borrowers, which is an important segment to provide resources to. But there's a sort of missing middle where you earn enough and your finances are strong enough that you don't qualify for a program, but yet, given the market conditions, you also can't afford to do it on your own. And so I think that we see a little bit of that as well, where and I'm forgetting there's an acronym now that's emerged for this group, but essentially they're not supported by the low income products, but they actually don't earn enough to make that step into homeownership themselves.
Well, any program that's out there to help people become homeowners, especially in a state like California, is very needed resource. So thanks for sharing a little bit about the company. Kind of moving to career advice. You've had a long career, and of course, you talked about starting Crib Equity from just your entrepreneurial spirit. What advice would you give that someone that's just starting out in this industry?
Yeah, I would say ask questions. I came to Crib Equity having spent already some time in the real estate in the real estate industry in prop tech. Actually, that home that we purchased in Seattle was such a difficult closing experience, and part of it was probably our own making, where we were searching in California and we carried over a lender and from California, and then a real estate agent referral from California to Washington to buy a house, and then local title and escrow, and like all these parties just didn't know each other and communicate. So it was just really difficult and cumbersome. I spent my entire paternity leave managing our purchase, which was sort of a bummer, but and so that got me into the title and escrow space. And so I spent a couple of years building a technology platform to streamline title and escrow, platform that was ultimately sold to Compass. And then I spent some time at Compass. And so, for the last few years, I've had before Crib Equity, I had the luxury of really learning what is a title and escrow officer's roles, and what are their concerns? What are the buyer's agents? What are the seller's agents? What is the mortgage lender's role and needs, as well as the buyer and seller, and actually being that person myself through those experiences too. So I've been in and around this space a lot, and I think the best thing you can do is just ask questions. There's so many nuances to the mortgage industry, so many specific products, whether it's unique borrower needs or all the different sales channels that can emerge out of mortgage. So just ask the questions. And I think one of the things I really love about the mortgage industry is that a lot of people are here because they want to help people, right? I mean, owning a home is a really impactful milestone, and a really major milestone that is meaningful in people's lives the day they buy home and onward, right? And so I think there are a lot of people that are really here because they're making those dreams come true, and they're really creative, and they're thinking, and they're applying their skills and their knowledge around how do we serve our clients and get them into owning a home, which is for many people their dream, or at least that home that they want to move into is the home that they want, right? And so I think those same folks that have that same the supportive mindset are also there to answer questions and to provide tutelage and to offer insight into questions that you have. So if you're just getting started, I think welcome. It's a super fascinating place to be in, and I think there's so much happening now that it's a really exciting space.
There's never a dull moment in the mortgage industry, that's for sure. And I agree with you. I think that people in general in the mortgage industry are very happy to share their experience and to give advice, especially to somebody that is new to the industry. So I think that's really, really, really good advice. As I mentioned at the top of the podcast, Skye, Crib Equity just became a member of the California MBA. Thank you so much for your support. Can you share with our listeners why you chose to support our organization?
Yeah, absolutely. Happy to be a member. So what's happening at the forefront of real estate finance is always of interest to us and is always important to us. So both the education and the advocacy work, events and opportunities that are happening through the California MBA are really important for us to be involved with and to participate in, and just to have the awareness and knowledge about the direction that some of those things are going. And then also our lending partners are very integral to our success. And so our ability to, serve borrowers and homeowners is in conjunction with our lending partners. And so that community and the connection with other members of the California MBA is important to us and something we want to continue to foster.
Wonderful. Well, thank you again. I appreciate your support. And Skye, thanks for being on Connect. This has been a great conversation.
I really appreciate it. Thanks, Susan.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.